Hey, it's Ty Crandall with Credit Suite, and in this short video, I'm going to talk a little bit more about where you can go to get commercial real estate loans and how to qualify as well. So commercial real estate financing is very popular for entrepreneurs, especially right now, because it's actually cheaper for you to be able to own a building than it is to actually lease or rent. If you're already leasing and renting now, there's a really good probability that you may actually qualify to buy that same property and get lower payments. How does it all work? Let's dive in and check it out. So you can invest in real estate a lot of different ways. First of all, a lot of people are familiar with SBA loans or 7A loans. So SBA loans through 7A is just a regular working capital loan you can use for almost any purpose. But SBA also has a program called 504, and their 504 program is used specifically for the purchase of real estate. So this program is designed to give you a way to get SBA to actually guarantee the loan from a big bank and then use that loan to actually purchase commercial real estate. Now, this is available from conventional lenders, big banks like Bank of America, Wells Fargo, for example. Now, there's also hard money lenders, and this is offered through some fintech or online lenders, and also through a lot of privately owned sources as well, or private sources. So this is private money where the interest rates are higher, the terms are typically a little bit shorter, but much easier to qualify for to buy investment properties than what you'll find with a conventional loan offered that's backed by SBA, such as the 504. Now there's Freddie Mac, Fannie Mae loans as well. You can get financing from credit unions. You can also get it from life insurance companies, even HUD themselves. And you can go to stacksource.com/commercial-mortgage-rates to be able to learn more. So some other cool sources that you're able to qualify for commercial real estate loans from as well. You can also try online marketplace loans. So this is sometimes soft money versus hard money because the interest rates are still higher than conventional bank loans, but not as high as what you're going to find with hard money lenders. And that's available through a lot of online marketplaces that give you places to tap into commercial financing loans. Look, if you don't know where to go, then just get in touch with us. If you go to creditsuite.com/get funding, we work with over 1,000 funding sources. We can, based on your individual scenario, help you find the right commercial lender. But as you're seeing here, Freddie Mac, Fannie Mae, whether you're looking at online marketplaces, hard lenders, soft lenders, or even SBA lenders that offer 504 loans, there's a lot of options available to either purchase commercial real estate or to borrow against commercial real estate that you already own to do some kind of cash out refinance. So what do lenders look at when it comes to qualify? Well, it's dependent on the lender and the type of financing you get. They're going to look typically at a collateral or the property itself. They're going to look at credit worthiness of you, your business credit company, or business credit quality for your company, your personal credit quality for you as an individual, certain financial ratios dependent on characteristics of the property. They want to see if the property can cash flow, meaning if you're buying a commercial building, maybe you're going to occupy one space in that building, one unit, and maybe you're going to rent out the other units. Well, what's the ratio on that? I mean, are you going to be positive cash flow? Are you going to be making more money on the rents than the mortgage cost you? So those are some of the calculations that they're using as well. And borrowers may have to provide several years of financials to qualify. They usually want tax returns, P&Ls, balance statements, and most importantly, they want financial information on the property, such as, is anybody in there leasing the property now? How much are they paying? That really will come down to figuring out the debt servicing ability, meaning, again, can the property, the income that the property is generating, actually pay for the mortgage payment itself? A really big factor when it comes to qualification for a commercial mortgage. So remember, when it comes to commercial mortgage, there's three things that mainly matter for qualification. It comes down to being able to have the credit to qualify, business and consumer credit, being able to have the cash flow to qualify. They're going to look at your tax returns, but most importantly, they care about the property's ability to generate the cash flow, and they care about collateral being the property itself. Is there any issues with the property that would prevent them from wanting to give you a loan? So those are the things that are very important. And remember, a lot of different places offer this kind of financing. If you'd like to learn more about the easiest place to get approved, just go online and fill out a handful of questions, and we'll help place you with the best source to help you get the best loan for your property, which means 20, 30-year terms, low interest rates, which will give you low payments, and you can get approved online directly at creditsuite.com/get funding. It's creditsuite.com/get funding.